The president receives a bill from Congress temporarily raising the federal debt limit, but promises to veto it as the budget battles heat up and the clock ticks toward default. Good evening, I'm Cassie Seifert in New York.
And I'm Jeff Yasteen in Miami. Paul Kangas is off tonight. We'll take a look at what a possible government default could mean to individual American investors. And world markets aren't very comfortable with this debt situation either, but they watch and wait to see what happens.
Nightly Business Report is brought to you by Digital Equipment Corporation, engineering networked information systems that help you turn uncertainty into opportunity. Digital, whatever it takes. Franklin and Templeton Worldwide form the more than $125 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, helping to build your financial future with comprehensive trust and estate planning services. A.G. Edwards, serving investors for more than 100 years. And is produced in association with Reuters, which provides real-time and historical market data, news and analytics over Quotron Advantage AE.
The consummate game of double dare is playing itself out in Washington tonight as President Clinton and congressional Republicans refuse to budge on the budget. And while both sides continue to sling verbal mud, the government inches ever closer to shutting down. Dennis Moore updates the story from Washington.
The president claims Republicans are being, in his words, deeply irresponsible.
These measures would make a government default almost inevitable because they take away from the Secretary of the Treasury the tools now available to avoid default under extraordinary circumstances.
Not surprisingly, those remarks did little to alleviate financial market anxieties about a potential default.
Thanks, Smith. The House will be in order.
In a day-long contentious session on the House floor, Republicans passed their debt limit and temporary spending bills on party-line votes. We're the responsible ones, their leaders claim, getting the job done while the president went golfing after his news conference.
The president doesn't have the right to sit at some golf course and make threats about the American people, close the American government, disrupt the bond markets with threats.
But the financial tools available to Treasury Secretary Robert Rubin make the threat of default mostly rhetorical.
There's no chance at all that the government will default. What the Treasury can do is some internal bookkeeping changes, essentially, that will move, that's a wrong word because it's not really moving anything, but will change the accounting that's done for the $1.3 trillion in trust funds.
The Social Security Trust Fund holds about $611 billion in Treasury securities, by law the only thing it can invest in. There's also $329 billion in the Civil Service Retirement Fund, $114 billion for military retirement, and the Secretary's first target, $21 billion in the so-called G Fund, a kind of 401k plan for federal employees. But the Treasury won't be going into the financial markets selling off any of those IOUs for cash.
If you, in essence, take some of the money that's in those IOUs and move it, this is all theoretical, if you move it in quotes to an interest-bearing checking account somewhere else in the Treasury, that creates some more room under the official debt ceiling for the government to continue borrowing and paying its bills.
What isn't theoretical, however, is the temporary supply shortage of Treasury bills created by the postponed auctions.
When the debt ceiling is finally lifted permanently, it will have a fair amount of debt issuance that will have to be done, and that could have a detrimental impact on raising yields.
But that fear, too, may be overrated. Many analysts believe that even if the Treasury did default, the impact would be to boost rates perhaps 1/4 of a percentage point, and only for a few months. Dennis Moore, Nightly Business Report, Washington.
Although the budget impasse clearly affected trading today, it didn't prevent blue chip stocks from setting their third record high in a row. Following yesterday's 11.5-point increase, the Dow Industrial Average opened lower this morning on a wave of profit-taking. Weakness in both bonds and the U.S. dollar kept stocks down until midday, but then they began to turn around. The president's call for Congress to work through the weekend seemed to take the edge off of investors' nerves. At about 2 o'clock this afternoon, then, the Dow hit its high, up about 7.5 points. And for the rest of the day, it traded in barely positive territory, going on to close with a gain of 6.14 at 4870.37. And for the week, the Dow climbed 44 3/4 points, coming back strongly from 2 down days on Monday and Tuesday. Trading volume closing out the week, a light 299 million shares, down volume B to up volume by 23 million shares. The Dow Transports finished 5.25 points higher, the utilities fell 1.5, and the closing tick a mildly bullish plus 167. The S&P 500 backed off its record set yesterday, but the 100 finally reached a new high at 564.67. The midcap 400 edged up 0.16. And the Commodity Research Bureau spot index ended up a half today. The New York Stock Exchange index falling 0.19 with a similar drop in the value line, and the broadly based Wilshire 5000 slipping from its peak by 2.5 points. The bond market opened lower and stayed that way throughout the day, but certainly didn't get any help from the University of Michigan's Consumer Sentiment Index for November, which was up and raised fears that people might do more Christmas shopping than expected this year, which could cause interest rates to rise. Also affecting bonds today was word that the Treasury would likely have to cancel 3- and 6-month bill auctions set for Monday and to be unable to roll over debt coming due on Wednesday. Tax-free and corporate issues finished the day down 3/8 point, and the Treasury's 30-year bond fell 22/32, pushing the yield up to 6.34%. The Lehman Brothers Long Treasury Bond Index was down 7.03, and Fed funds finished the day at 5 5/8%. Later in the program, we'll see which stocks were moving on Wall Street today. Jeff?
Washington's inability to reach a debt ceiling agreement is being felt around the globe. In Tokyo, the dollar ended the week down 4 yen, and things are getting edgy on European markets as well. We have two reports, beginning with Reuters correspondent Steen Stovall in London.
Games of chicken normally end with one party losing its nerve, but such games sometimes end in disaster. Traders on international financial markets fear that now could happen in Washington. A budget deal must be hammered out soon between the White House and Congress. Otherwise, the U.S. could find itself defaulting on its debt payments.
The possibility of default has already weakened the dollar and weakened the U.S. bond market. A default would weaken the dollar further and push U.S. bond yields higher. How much higher U.S. bond yields would go would very much depend on what sort of avenue we went down.
Next Wednesday, the U.S. government must make an interest payment of $25 billion. Analysts say the U.S. could scrape the money together by taking emergency steps, but they believe scrappy solutions couldn't last long. Meanwhile, foreign investors who hold U.S. assets and who depend on precise interest payments are getting more nervous.
Japanese investors we've been speaking to are ringing us up asking, well, are we going to get this coupon payment? We've tried to reassure them, but we can understand their concerns.
Analysts say Washington is playing with fire, and confidence in government IOUs could suffer generally.
Previously, bond markets were regarded as a very safe haven. If now the biggest capitalist economy in the world is not going to honour its debts, even if only for a short time, what does that imply about all other governments elsewhere?
I think the problem is, of course, there's going to be the knock-on effects for the likes of Europe and indeed other parts of the world as well.
At present, markets are betting that the U.S. budget drama will have a happy ending. Analysts say failure to do so would hardly be sensible at a time when the U.S. is still heavily reliant on foreigners to plug its deficits. Steen Stovall of Reuters for Nightly Business Report, London.
This is Lucy Kraft in Tokyo. The showdown in Washington has had its most dramatic impact on the currency market. Until this week, the yen had taken a beating over the so-called Japan premium, a high-interest penalty Japanese banks must pay when borrowing funds abroad. Banks have been trying to end-run the premium by borrowing in yen and buying dollars as needed. And next week, in an indication of the country's continuing economic woes, Finance Minister Masayoshi Takemura is set to take the unusual step of declaring a budget crisis here in Japan. But anxiety over the U.S. default has momentarily stolen the spotlight from Japan's budget crunch and turned the market bullish on the yen. That, in turn, has supported the bond market. But when and if Congress and the White House patch up their differences, observers here expect the dollar to come roaring back again. Lucy Kraft, Nightly Business Report, Tokyo.
Still ahead on Nightly Business Report, what does all of this mean if you're a small investor? We'll take a look at how the battle of the budget might affect average Americans. Reviewing today's stock market activity now, the Dow made a record high for the 55th time this year, closing up more than 6 points at 4870.37. Declining issues overcame advancers by 267, and there were 102 new highs for the year and 35 new lows. Leading New York's most active list, Kmart slipped a quarter point today, trading more than 16 million shares. Bear Stearns downgraded the stock, and Duff & Phelps downgraded Kmart's debt securities. Micron Technology fell 3/8, as did Telmex, and Seagate Technology advanced 3 1/8, and its soon-to-be counterpart Connor Peripherals rose 2 1/8. Seagate says it expects to take a charge of up to $220 million to cover the cost of the proposed buyout. U.S. West Communications down a quarter. Pharmacia and Upjohn both lost 1/8 today. Ford rose 3/8, Motorola gained 1/8, and Digital Equipment advanced 7/8 of a point. Among widely held issues, blue chip Alcoa was up 1.5 today, and blue chip Boeing soared 1 1/4. Consolidated Rail chugged 2.5 points higher today. There's speculation the company is ripe for a takeover at $85 a share. Goodyear Tire peeled out a 1 5/8 point gain, and H&R Block, the parent company of CompuServe, climbed 2 5/8. The internet is experiencing explosive growth, and just about any product associated with the net seems to be benefiting. And Unicom fell a point today. It's one of the components in the Dow Utility Average. Oppenheimer downgraded the stock. The big percentage gainer of the day was Amri, jumping 1 1/4. Amri has offered to buy Facelifters Home Systems in a stock swap deal worth about $11 a share. There's speculation Steve Bedowitz, Amri's founder, sold his million shares in the company today. We were unable to reach him for a comment. BBN Corp, formerly Bolt, Beranek, and Newman, was up 3 5/8 today. Just this week, the software manufacturer named its president and CEO, George Conrades, to the additional post of chairman. He succeeds Stephen Levy, who retired on Monday. First Mississippi ended 1 3/4 points higher. First Boston initiated coverage of the stock with a buy recommendation. And Pacific Scientific gained 1 1/4 today. Business Week reports that the aircraft equipment maker is currently in talks to sell all or part of the business. And nothing heroic about the performance of Marvel Entertainment. It was the big loser of the day, tumbling 2 1/8. Earnings were lower at 19 cents a share due to weak comic book and trading card sales. First Boston estimates for the fourth quarter were cut in half today. And Ogden Corp gave up 1 3/4. Goldman Sachs downgraded this stock. The analyst there sees no growth next year. In NASDAQ trading today, the composite index backtracked 1 3/4 points, exactly its decline for the week. Volume data a tad from yesterday's pace, and advancing issues were neck and neck with decliners. Cisco Systems rose 1 1/4. Cisco turned in strong first quarter earnings at 59 cents a share, thanks in part to its introduction of a new product line. Sun Micro advanced 4 3/4 today. Intel fell 3/4 of a point, and Microsoft finished 2 1/8 lower. Also a sad story for American Greetings. The stock down 3 7/8. The company says it will have to take a third quarter charge because of its struggling create-a-card business, probably going to be 47 cents a share. U.S. Robotics rose $4 on better-than-expected earnings of 75 cents a share, beating street estimates by 12 cents. Another company riding the internet run-up. Adobe Systems gained 5 1/8 today. No change for Bay Networks, and Sync Research, yes, up 24 points, easily doubling in value from its initial public offering price. 3.9 million shares came to market at $20. This company provides wide area network solutions exclusively for IBM computers. And 3Com fell 3/4 today. The NASDAQ big movers, Vizio Corp rising 10 points, painting a pretty picture for its first day of trading. Vizio went public this morning with 2.5 million shares priced at $16 each. Vizio produces drawing and diagram software. Harbinger Corp jumped 5 1/2. Alex Brown's strong buy recommendation certainly didn't hurt the stock. And DESPG Group suffered a 5 1/2 point drop. Its statement that upcoming results will be hurt by a shortfall in licensing revenues didn't sit well with Cowen & Company. The brokerage firm downgraded the stock. On the American Exchange, the market value index moved up 0.19. For the week, it actually rose 1.89. Volume 1.5 million shares ahead of yesterday's pace, but declining issues outpaced advancers by 64 shares today. On the Amex, the most active issue was NFC Public, up 0.5, and the big mover of the day, North Bay Financial, gained 1 3/4. North Bay has accepted Bank of the West's $47 million buyout offer. And finally, Colonial Data up 1 1/4 today on merger speculation. And that's our Wall Street wrap-up. Jeff?
Most Wall Street analysts still see the chance of a U.S. debt default as remote, but nevertheless, they are starting to consider the implications for individual investors who own treasuries or bond funds. Suzanne Pratt reports.
Because the U.S. government has never before defaulted, Wall Street analysts aren't really sure how individual investors will be affected. But they do agree if interest and principal payments are skipped, there could be temporary chaos in the credit markets, and as a result, lower prices for any investors that bail out.
Given the fact the Treasury market is the biggest market in the world, even if there was a default, I would definitely think that there would be a market for securities to be sold, but at a price. There would probably be fairly sharp markdowns, at least initially.
Today, the Treasury Department notified holders of treasuries maturing next Wednesday and Thursday that there was a chance it could roll over their debt. For holders of government bond funds, the picture is a little muddier. Some funds are required by law to liquidate securities that have defaulted, potentially causing a flood of supply and making it difficult to calculate the value of many funds. And others, like David Rosenberg at Oppenheimer, have already pre-spent next week's interest and principal payments.
I'm in a negative balance. I'm forced to liquidate because I then have a negative balance mutual fund because my receipt of cash from the federal government does not come in, and I'm forced to liquidate. That could cause even more downward pressure on prices.
And experts say some fund managers have already planned to make alternative investments.
On a broad basis, that you will find managers taking steps perhaps to cut back where they can on a reliance of government paper and perhaps shifting into more corporate-oriented paper, high quality in the case of a money market.
Bond market experts say the best piece of advice for individual investors is don't panic. If there is a default, it will be because of politics, not because the U.S. government is running out of money, and it will probably only last a few days. Suzanne Pratt, Nightly Business Report, New York.
Coming up in Friday's Market Monitor, Douglas Jimerson, President of National Investment Advisors.
McDonald's has won out over its copycat rival, McDonald's, in a trademark battle in South Africa. The U.S. chain got a court order barring the use of the McDonald's name and also from selling bogus Big Macs and other trademark products. The ruling overturns a lower court decision in favor of the McDonald's imitator. The real McDonald's will open its first South Africa restaurant this weekend.
Dow Chemical has agreed to buy 80% of Inca International, one of Europe's biggest producers of plastics used in making bottles and other containers. Dow will buy the stake in Inca from Enichem, the chemical company owned by the Italian government. The sale is part of the government's privatization program. Dow Chemical stock was up a quarter point to 69 today.
Monday on Nightly Business Report, the latest on the battle of the debt limit. As Congress and the President fight down to the wire, the government could run out of money.
Our guest market monitor this week is Doug Jimerson, President of National Investment Advisors, which manages $60 million in mutual fund investments. Doug Jimerson is also senior editor of the mutual fund investment newsletter, National Trend Lines. Doug, welcome back to the Nightly Business Report.
Thanks, Cassie.
How much longer do the technical models that you use tell you that this market can go on in the way it's going now?
The big picture to me is that we are in the final stages of a mini bull market that started in June of 1994. And we have into early 1996.
How far into 96?
Well, sometime in the first quarter is where I expect the market to top. And probably different indexes will top at different times, perhaps the NASDAQ first, which is typical, and then the Dow.
Oh, do you have a number in mind where you think the Dow may top?
Well, I think the Dow will exceed 5,000. I think that's fairly safe to say, quite frankly. And there is more cash to come into this market. There's been a lot of shorting on the market that has been helping to fuel the market, climbing a wall of worry. And so there are more new highs coming.
What about the bond market?
Well, the bond market is in a positive long-term trend that has been going all year, and the bond market has been leading stocks higher. And although we've had a correction the last couple of days, I don't think that is finished. Bonds are likely to continue to rally for the next month or so, and bonds will probably lead the Fed to lower interest rates.
And do you think that bonds will have a correction then after the first of the year as well?
Perhaps before then. Bonds tend to lead stocks, and bonds will tend to top first. So sometime in the near term, bonds may reach their peak.
Now, one of your investment strategies involves market timing with mutual funds. Now, most people buy and hold mutual funds rather than trying to market time with them. Explain why you do that.
The reason is that we find mutual funds provide the facility to trade without cost, and investors in the long term are looking for stable returns, but also they want to sleep at night. And we help to take some of the risk out of investing in the mutual funds using a market timing strategy. Also, we use an asset allocation strategy with another service. And the use of money markets at the mutual funds helps to lower the risk, and there's no transaction cost for making the exchanges. So mutual funds provide the ideal vehicle.
Which mutual funds do you like now?
Well, right now I would go for natural resource funds such as T. Rowe Price New Era, and perhaps dollar cost averaging into a gold fund, and hold on to those technology funds for a little while longer.
How much longer?
About 2 months, I think, is the time frame.
And why 2 months?
Well, my work is time related as well as a trend following approach, and my view is that we have approximately that time period of more gains in the NASDAQ.
All right. Now, you also do look at some individual stock issues, and the last time you appeared as market monitor for us in May, you recommended Applied Materials at 40. It's now at 51 7/8. What would you do with it?
I'd hold Applied Materials for a couple of more months, and I do expect new highs in that stock and stocks like Intel. So for short-term investors, those are going to be opportunities here, but I would be prepared to take profits. And also, I would be buying domestic oil stocks. We've talked about Chevron before.
Chevron you recommended the last time you were on the program, and you've recommended it in previous appearances as well. In May, it was at 47 5/8. Today, it closed at 47 3/4.
Pays a 4% dividend. I would go with that, and other domestic stocks like Phillips Petroleum.
Okay. Now, in May, you also expressed some concern about investing overseas. Do you still have concerns in that area?
Yes. I repeat that caveat, that investors need to remain focused on the domestic area. The dollar is above its 200-day moving average, and international stock funds are up just 5% for the year to date.
Doesn't that imply to you that they could have better returns than other funds?
Perhaps, but they are in a period of decline, so I would avoid them.
All right. Thank you very much for joining us.
Thanks a lot.
Our guest market monitor, Doug Jimerson, president of National Investment Advisors.
And finally tonight, ever wonder what to do with all the money you've made by taking our market monitor's advice? Well, here's one suggestion. To commemorate the 15th anniversary of the Rubik's Cube, Diamond Cutters International was selected to manufacture the world's most valuable cube. This Rubik's Cube masterpiece is a fully functional replica comprised of more than 1,300 diamonds, rubies, and other gemstones mounted in an 18-karat gold setting. If the notion of handling a $1 million puzzle makes you nervous, you could spend just $2,500 to buy a Rubik's Cube made of pure silver.
I think I'll stick with $250 for the plastic version.
Well, I can never figure them out myself. That's Nightly Business Report for Friday, November 10th. I'm Jeff Yasteen in Miami. Have a good weekend, Cassie.
You too, Jeff. I'm Cassie Seifert in New York. We'll see you next week. Good night.
Nightly Business Report is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE. And is made possible by A.G. Edwards, helping to build your financial future with comprehensive trust and estate planning services. A.G. Edwards, serving investors for more than 100 years. Franklin and Templeton Worldwide form the more than $125 billion Franklin Templeton Group, a global alliance of over 110 mutual funds and investment products, including U.S. government securities funds. Digital Equipment Corporation, engineering networked information systems that help you turn uncertainty into opportunity. Digital, whatever it takes. And by the financial support of viewers like you.